So I'd like to welcome up to the stage Martim Facada from Traxys, Battery Holdings, Brett Lynch from Sayona Lithium, and Shanthar Pathmanathan from Chariot Corp as well. So gentlemen, come and join us on the stage. And let's tuck into some of the topics around the industry and some of the details that Rodney's gone through there as well. Why don't we flip to hear from the corporates for a second? Brett, could I put you on the spot? First up. I'll let you sit down first. Yeah. What are some of the exciting things that we've got going on in the lithium space at the moment? You guys have a North American foothold, really interesting projects going through in Quebec. Despite some of the price dynamics that we're going through, what's exciting you about working in the lithium space at the moment?
Yeah, look, I think first up, certainly the North American market. Which, I saw Rodney's at the end of his presentation, got us very excited. For an ASX listed company, for some Aussie boys and girls, Quebec and Canada and the US market's about as far as we can go. And we travelled and set up really the core of our operations to take, I think, advantage of some very first mover opportunities that we saw over the last few years in North America. And the reasons for that, I think the first was that the US market, in the last couple of years has really awoken to the need, the push of moving along with the EV revolution, as some of those numbers, I think, said. The US government has really now broadened its arms to bring in Canada as well. It can see that it needs a huge amount more of local domestic production. It can't do it just out of the US. Canada really is a terrific opportunity for that. And that's been propelled by a lot of these IRA incentives. It's something that battery manufacturers and OEMs in the US are hooked on, and the incentives are so large that is really driving an enormous push to localise supply, which is exactly what the US wanted to do. So that gives us, and being based really very much in Canada and specifically Quebec, it gives us a unique growth opportunity. Whilst there's still very few really organised competition there. It's still only just in its formative stages. For us, for example, just 2 years ago, we had 20 million tonne of resource base. Given the sort of demand for hydroxide carbonate in the US by 2030, that's significant. It's led us to just in the last 2 years grow our resource base. Today, it's well over 100 million tonnes. And by the end of the year, I expect it'll be 200 million tonnes. Even that, we need to go more, faster. Two things we need, and the North American market needs is speed and tonnes. And they're very just simple but key drivers, which I think is actually an exciting way to grow the businesses, to be able to supply that. I think the other exciting challenge is not just production and speed, which led us, I should say, to actually acquire the only pre-existing lithium operation in North America, which was North American Lithium, and then find a way to turn that around. It failed 3 times. Angels fear the tread, but we did go in there, and we've started that production only the last few months ago, and so far we're on track with getting that up to back at 226,000 tonnes a year by October. So that challenge made us move towards so quickly for a relatively small company at that stage to bite off more than we could chew. But bite it and chewed it we did, and we look like, I think, being pretty successful there. Just like with other companies, we also need more tonnes. And we went north into James Bay area, a bit more remote, but just announced we acquired about 18 months ago a deposit called Mobilan. It was 10 million tonnes, great grades, great stripping ratios, great economics in terms of delivered cost into the US. But we've we've drilled like crazy since we bought that. We just announced that it's now 51 million tonnes at a 43-101 at about 1.33% grade. And we've still got another twice as much drilling to be done and taking it from 10 to 50. So, we're expecting that resource could be well over 100 million tonnes and by the end of the year. But that's sort of some clear examples of how much growth opportunity there is, I think, in the North American market. The last point, I think, which excites us but is a challenge, it's also about getting the sustainability right. I think certainly in North America and in Canada and specifically Quebec, there is a real focus on changing, I think, the perception and the reality of mining from historically, been a pretty dirty industry, but now we're part and parcel of leading climate change, the EV revolution, socially. Everyone who's come, and we've just put on 250 people in the last 6 months, are all coming to work for Sayona because of that reason. I'd like to think it's Sayona's brand, but I am absolutely sure it's about their contribution to actually cleaning up the planet. And what that does, I think, is make us think a lot deeper and a lot further on what we're doing in terms of environmental, local stakeholders, and bringing all of that together in a sustainable way. And it's changing our mine planning, our thinking, and that, I think, is both challenging but incredibly exciting. I've 30 years started as an underground coal miner, and to think where I might finish my career is actually in a sustainable, clean, green, and our mines are specifically located for hydroelectricity. That's a core planning tool for us. So I'm hopeful that we can rise to that challenge, because I think that's what the mining industry really needs.
Yep. Absolutely. Excellent. Really touched on some great points that we can unravel as we go through. But Shanthar is the other corporate up here, and also North American projects, but private projects this time. Can you take us through your view? What's exciting you? And is the IRA still really coming into fruition and giving that sort of advantage to you with where your projects are located?
Oh, look, I think, firstly, we are a private company, but about to list shortly, right? So we will be listing at about $100 million market cap. Our focus is we focus on the same issues that Brett talked about, except I would say that we are looking slightly longer term. And the challenge, as I see it, is really scale in this industry. The industry is going to replace part of the $4 trillion oil market, right? Okay. It's essentially a consumer product that will be sold. So even though it's got a slightly longer life than oil, it's going to be a consumer product. So we're talking about a very large scale opportunity longer term. So I think our focus there is, to amass as much land as possible, which we've done. So we're the largest landholder in the US to date, right? And really focus on the US domestic supply issue, because that is a lagging issue. I'd say China's gotten ahead of the curve on with respect to the other big markets, we see a terrific longer term opportunity in the United States, and I think in terms of what excites us is that, the scale is there, but the scale will need to be addressed through the drill bit, right? So it's all going to have to come through exploration. And that's our focus at the moment. Yeah.
Yep. Just delve into that a little bit more. As a lithium explorer, how challenging is it right now? There's a wind in the sails in certain macro themes and certain government policies that we've talked about. But how hard is it to bring that project into production? Is it getting easier? Is the resource base, is the skills base coming in and improving compared to where it was a while ago? Where are we at?
Look, I think you raised some good points. There are definitely immediate challenges in the US. Yeah, the skills base is lagging, I would say. We're fortunate to have Max Baker, who runs Integra, which is a New York listed company, and that crew that basically get deployed to our projects as well. So that is addressed short term in that way. But I think there is definitely an issue with this energy transition that's about to happen. and it's all going to be largely metals based. The mining industry is going to come back to the fore in the US, like we haven't seen in a very long time.
Yeah, excellent. Martin, let me bring you in, and please, of course, introduce yourself. But we know of Traxys quite well from some of your colleagues speaking before. You guys are across lithium as well as battery materials. What's your take on some of the dynamics that we've had discussed so far, and how do you see the opportunity now? You know, as primarily as a trader in lithium, where are the opportunities that you're seeing?
Well, for Traxys is extremely important to see and check, all the different opportunities out there from a mining point of view and obviously chemical point of view with the diverse plants that are set to come online in the next few years. We basically rescued Nemaska from bankruptcy a few years back, and we also invested in life cycle recycling in North America. So we've been extremely active in what's supporting and seizing opportunities to contribute to the growth of what's the chemical production of metals such as lithium. But obviously cobalt, we're one of the largest suppliers of cobalt in the world right now, and we supply manganese and nickel. So the NCM metals are basically products with whom we deal every day, and our clients, tier 1 and tier 2 cathode makers globally, like our approach of being able to supply the different NCM products. From the mining point of view, and some of what the panelists or the other panelists have been addressing in the last few minutes, it's a challenging period in the sense that we're going to need far more lithium than what we have today. It's true that the prices are dipping a bit now, but that's just it's part of what Rodney was saying earlier of the big amount of inventories out there, but we need more mines. We need more lithium mines, more cobalt mines, nickel mines. We need if we want to support the plans of Volkswagen, Tesla, Stellantis, and so on, we're going to need 10 times the amount of mines we have today in lithium, cobalt, and nickel. That's a fact, and more than competing with the oil and gas sector, we're just going to contribute to the decarbonization of the globe and complement, somehow to complement that side of the market. So.
Yeah. Okay. Just want to comment on something like Chile and the sort of resource nationalism push. Apologies if you covered this a bit earlier, Rodney, was in and out of your presentation, but it was mentioned this morning on the panel as well. I just want to get sort of the lithium sector's view on what this can do for the industry. Is it an opportunity for everyone who's ex-Chile? Are the Argentinian projects going to see a lot more love from this, or what's the view? Or is this, it's a shorter-term blip that's caused some relapse? Yeah.
For us, wasn't a surprise. I'll say that it was like common knowledge that if you wanted to be involved in Chile somehow, you'd have to go through Corfu or Codelco. So from that standpoint, basically what the government did now is just to, in a way, legislate in a more official way to basically confirm that that's the way how you have, if you want to be involved in the lithium industry in Chile, you have to go and negotiate with the political entity. Abramal and SQM, they don't own the salar. The salar is owned by the state. That's known pretty much by everyone across the industry. So they are just leasing the salar to these companies. So I think obviously it had an impact in the markets in the sense that it's been seen as a nationalization, but I think it's far from that. So what's really happening here is the state trying as well to benefit from the upside and be sure that the mining sector in the country, it benefits basically the ecosystem and their surroundings. In this case, the Atacama, where Abramal and SQM operate, or can be Maricunga, where Codelco has been looking at for many years. So it could be that accelerates the activity there. It's fair to say Argentina, on the other hand, is poised to become one of the largest producers in the zone, in the area, with different investments, recent investments.
Yep. Anyone else on the Chile scenario situation? Oh, no. No need. Okay, excellent. I want to just pivot onto China, actually, and just processing capacity midstream. We talk a lot about like the momentum, if you like, around and the things that got us excited about North America, American industry. But how's the processing capacity catching up ex-China, and how with the geopolitical lines that are being sort of divvied up, what might that do for segments of the industry longer term?
We need those plants. Brett here next to me, they have a, correct me if I'm wrong, but you guys have a JV, and your partners just received money from the state from the US government to build their hydroxide plant. So we obviously, it's critical that we have our hydroxide plants in Europe and US, but it's fair to say that China has done a better job in the last 10 years and goes down to policy making, and we're just catching up. Maybe if Brett wants to.
Yeah, I think just to jump in there, I mean, the issue is ultimately the demand for battery cells isn't dominated by China. It is a global thing, and the US, once it's fully fledged, and Europe will be bigger players, and it's a question of where are you going to source that supply from, and how does it work out politically if there's a shortage, tariffs and so on. So I think from a strategic perspective, I'm of the belief that we will see a bifurcation of pricing of lithium between North America and Europe versus China. But the US has clearly decided, like it did with oil, that they want energy independence, they want battery independence, and that's what they're going for. And they're putting checks there, and they have a good neighbor in Canada, to do it. So it will be interesting to see how, China is being forced into very specific plays in South America and in Africa to source. And I think that's, going to underpin part of the, having first world enterprises doing lithium chemical conversion is going to come at a higher price. The capex between China and ex-China is ridiculous. I mean, China is all under $10,000 a ton, and ex-China is 30 plus. So, there's that to factor in when you amortize the costs over the life. But I think that it's going to go ahead nonetheless for obvious reasons, and but it is going to take time and skills transfer to get, to do the ability to mass produce lithium battery grade chemicals outside of China.
Absolutely.
Yeah, look, I think from one who's sitting inside the bubble, it is the direction's already set, crystal clear, and the IRA policies are the first, really pull on making that happen in reality. I mean, just what we've seen at Sayona, that initiative literally has brought in a wave at the battery level, and that's all committed. That will all happen. Now we're working our way down through the supply chain. Not fast enough, but like Rodney said, this isn't something that's going to happen overnight, but it will continually happen because there is so much growth that has to happen. I mean, just for us, which within 3 years, we'll have moved and completed our what I call rock capacity at up to 200 million tonnes of actual in the ground rock. That'll be producing well in excess capable of 1 million tonnes from zero basically 3 years ago. And we're right in the middle of planning now how to convert that domestically, right, in Quebec to well over 100,000 tonnes of hydroxide and lithium capacity. And that planning will be pretty much well developed before the end of this year. And, that's just one relatively humble small player. So that's all going to be replicated, and it's going to be fully supported by both the Canadian, the US, and certainly in Quebec governments. They're starting now to move in step with that big US policy, and that's coming. I mean, Justin Trudeau was on our site only a few weeks ago, and wanting to make sure that he knew what needed to happen was to bring as much investment into Canada, as opposed to the big money rolling into the US at the moment. So I think all those wheels are in motion, but it will take like a tractor, a while to get up to speed. But I don't think there's any doubt that it's going to stall or it's not moving ahead already.
Mm-hmm. Do you think lithium is the sort of segment of mining that's going to be the poster child to bring in the new capital, to bring in the ESG? You mentioned before around some of the new team and staff that you're bringing on en masse, and that they're really keen to get into this industry because they believe it's got the energy transition mandate, which it does. Do you think that it's a sort of a tall order, sort of the weight of the world on lithium's shoulders in that respect, to bring new capital into the sector that's been starved of it for over a decade, really?
Yeah, that's how it feels. I agree with you. Lithium feels like the poster child for whatever reasons, but it certainly seems to be what is getting things circling around and getting that focus. There's no shortage of, I think, customers and consumers that little us deal with every day, which we would never. I mean, to get phone calls from General Motors and Ford and everyone else, frankly, on the globe is extraordinary by any measure, I think, across the mineral sector. So, yeah, I think that's part of the signals and the clear intent of really it's going to get built out, built up and built out step by step.
Okay. Does anyone in the audience have any questions for our panel? Anyone want to put some questions? Yeah. Someone down here for Richard.
Hi there. Probably initially directed to Rodney, but maybe the mining companies as well. You mentioned grade deflation, and the tipping point seems to be 5%. Let's say, or if you're a green bush, fantastic. But with this supply squeeze and the issues happening in Chile, are the companies not hedging their bets and saying actually 3.5%, 4% is going to be fine because prices have to go up because there just isn't the supply?
You mean to produce a grade of 3.5, 4?
No, with just your lithium oxide grade. If you've got a project at 3, 4, 5%, or should we not be looking at that as investors? And 6 is the magic number, or are they? I mean, the guys
optimize it from a cost and revenue perspective. So I mean, so they work it out, and the converters in China have got good at processing almost anything. In my opinion, if Mount Marion material went anywhere other than Ganfeng, they wouldn't be getting battery grade out of that. But I stand corrected. But that 3.8, that's got to be pretty hard work. But it's a question of, again, is you've got to ship it, and there's waste. So that's a consideration. And I think if we look at that just separately, I think that's, Pilbara looking at that midstream calyx product in terms of shipping less waste and a higher grade product, because you can't, as we scale lithium, keep moving 94%, 94 point whatever dirt and 5 whatever in material. So I think that's a... Brett, you want to...
Yeah, just a quick note there. So no, absolutely. So the export of lithium phosphate or sulfates, that's one of the intermediates that companies are now exploring. But it's fair to say the last 7 months you've seen ore much below 6% being used in conversion. So 6% is economically what everyone has been looking at since, let's say, 2015, 2016. But when the price shoots up to the $80 kilo, and you need more units of spod, you had like spodumene below 3% being consumed and converted in China, and obviously the other type of ores much below 4 and 3%. So it's been quite common.
Yeah, look, from our perspective, we've got 15,000 tonnes already sitting at the Port of Quebec. It's 5.7%, but our spec for selling the 30,000 tonne first shipment in 1st of July will be 5.4. And again, that's the sweet spot at the moment. How low will that go? That's an interesting question. Anything sub 5, I'd say that's stretching my thinking at the moment. But hey, I could have gone back, just a little while ago, and anything below 5.7 was stretching it. So, yeah, it's I think it's a squeeze, but and it could easily go less than 5. I think 5.4 is pretty normal today. And could it go lower? Yes. Yeah.
Okay, there was another query down here. Yeah, at the front. Thanks.
Thank you. Could you please elaborate on the capex? You mentioned China can produce or invest 10,000 per ton, and I guess the West, Europe, US at 30,000 per ton of capacity. So, what is the main difference? Is it the environmental issues, or what is kind of will this capex curve converge over time, or how do you see this developing clearly? Because that makes Chinese electric vehicles hugely competitive. They can take over the world, right, over the next 25 years.
Maybe you can talk because he's been there. You've been at the coal phase.
Yeah, look, I couldn't tell you specifically, and Rodney might be able to pull out the details of what explains exactly, the capex difference. But it doesn't surprise me, having been to several plants in China and having been involved with building one in Australia and recommissioning one at NAL, that it's of that sort of scale. So how do we actually bridge that gap? Yeah, I think that is a very good question, but I suspect it's got a lot to do with, standards of, the capital in terms of environmental and processing and disposal, etc.
Labour as well, obviously.
Correct. Yeah. So there'll be levels that you can compete on in the Chinese market, which you just can't compete in the Western markets, which will be more regulated and at a higher standard. And that's the way it will be. And there may well be a price separation there. How does that work through exactly exporting Chinese vehicles all around the world? Well, I think the governments will think about that too. So I probably haven't given any details on it, but that is something for us to work through in the years to come. For me, the solution was straight up buying North American Lithium in administration, and we slashed our capital costs probably to lower than China. So I like to think we've been able to address that issue at NAL straight up front. But for the greenfield operations, it's an ongoing challenge that's always been there, I think, in competing with China.
It seems like an extraordinary difference. I understand 50%, right? But it just strikes me as a 3.5 times bigger. This is a huge anomaly. There must be a way to exploit this huge inefficiency. It doesn't make sense to be so huge despite labor costs. Labor costs are probably not such a huge input into the differential. So I'm just curious because it doesn't make sense.
Look, I know, from speaking to people who were involved in Albemarle's building of Kemerton, they said it was over-engineered and what have you, but they build it to standards to last 40 years. I don't know the build quality and the materials used in China and the time horizon, but that is the difference. I'd have to, do an assessment. But you raised an important point about Chinese vehicles going all over the world because they already are now, and you've got something completely different when it was internal combustion engine vehicles. They couldn't quite get to the European quality, but EVs is a completely new, different playing field. And you're seeing like a BYD Seagull at $11,000. They are going to, I think I saw numbers, I think they're expecting about 1.2 million EVs from China into Europe, I think, by 2030. So we'll see how the different economies defend.
Thank you.
There's a question at the back there.
Hi. Would you be able to share your thoughts on the impact of technology development on both the efficiency, the economics of the overall sector, as well as its sustainability upside?
Yeah, perhaps, I can, having put a Moen into production, and we spent 100 million Canadian dollars on North American Lithium, in refurbishing that. Effectively, it was mainly around the processing plant. And a large portion of that was actually connected with improved technologies. It was very much at NAL around iron separation, which had been a major problem for the previous owners. And to date, that technology has really worked very well, to the point where these are iron separators or sorters in the plant, and we're actually now looking at deploying those into the pit, which has actually been done for a long time in the gold industry in Quebec, but hasn't been brought into the lithium sector. But the operating efficiencies, both in terms of freeing up the plant and not having to effectively extract that iron once it got in the plant, which is very painful economically and efficiently. Already that's moving to a whole new level of efficiency. And we're pretty confident that the plant, based on its pre-$100 million worth of upgrades, could really only produce about 3,300 tonnes a day. We're already absolutely confident with these upgrades. We converted now to 4,200 tonnes a day. And with some of these other improvements that we're now looking at in terms of in-pit sorting, etc., we're talking something in the fives, maybe 5,500 tonne a day. And we actually do that within, we think, 18 months to 2 years. So I think the opportunities now that lithium has become a very important critical mineral and part of mining's future. Some of this will now be brought in, and you'll see a lot of improvements, I think, in the lithium industry. I mean, even just at North American Lithium, and traditionally, most of the deposits in lithium that I've ever seen is one pit, one concentrator, and then one downstream refinery. And I can say on behalf of the coal and iron ore industry that I've spent half my life in, I mean, we got into hub and spoke models to reduce the capex. We didn't build a plant every pit. We also got the advantages of that from a blending perspective, quality control, flexibility, and that's only just coming to lithium. So all of these, I think, you'll see a huge uplift in productivity and performance in terms of, I think, quality control, and that will be pretty important for supplying what I think will be a high performance market in North America, and will differentiate, I think, some of the real quality suppliers in North America versus maybe some of the other suppliers in other parts of the world.
Any other comments on efficiencies? No? Okay, any question from the floor at the back there? Yeah.
I think this is probably going to be aimed at Rodney. I read last month there was a lithium producers conference, I think in Shanghai or something, and there was talk of a sort of price floor that the producers put on, the large producers. And I haven't seen much around that, but I mean, to what extent do you know about that, and is that real, and is that going to play a big part in the market?
Yeah, look, I think that may have to do with effectively what lepidolite costs, but Martim is a trader, he'll tell you.
There was a gathering, but the government didn't support any price floor, and producers decided to stop selling. So that's why the price is rebounding now. So there is a gathering to try and put the floor, precisely because of the ore, the cost of the ore. You have ore that you brought to China at $7,000 a ton. How much is that? Like $60,000 hydroxide. So it's.
Well, you saw my maths about the 275. So that would have been, and I think lepidolite on some of the low grade ones is also in that ballpark. Yeah. So I think basically people are squealing because they can't make any money.
Yeah.
They're losing money, and if you've got inventories, well, then you're in big trouble because you've overpaid for those.
Yeah. So basically, we had a run of a month and 2 weeks of everyone losing money because of the high raw material costs. but that has stopped now with the rebounding of the price. But might be temporary. We don't know. We don't know if the price is going to come off again. So
And I think sort of looking at it in a medium term, to the extent that the Chinese producers are that large and that huge proportion of the market, that they can almost behave like a mini OPEC when it comes to lithium pricing. I mean, is that...
Well, that's just it. So on the hydroxide side, absolutely not. That's run effectively by a cartel of the major players. So hydroxide is mostly contract-based, which is why you didn't see it really give way as much. And the CIF, the North Asia price, held up a lot better. The Chinese spot carb, my understanding is about 20 to 30% of the market is China spot. Is that right for carbonate?
60s to 70, pretty much everything.
It's going through the spot now.
Every month in negotiations.
So, carbonate is far more exposed to that. But in the end, it's part of the reason why I suggest that you look at the incumbents holding on to their spodumene now and not selling it into third parties, because what happened in the last down cycle we saw in 2019 is non-integrated producers buy the spodumene and convert and dump because they don't have balance sheets to hold it. So they weak hands. Whereas if you look, and I said, production numbers looked a little bit light, but that could have been an active move to not overflood the market. But that's with companies with big balance sheets. You don't know what a tier 2 and a tier 3 Chinese player's balance sheet really looks like. You just know that he dumps it. And on the way up, they squeeze a little and hold back. So they play the game. But when times are tough, they're not the guys to lean on. And also, if you recall, Alex will tell you, with Altura, they reneged on the floor pricing. When spodumene hit 400, they wouldn't pay the 550. And Altura went to the wall. So people are a little reluctant to re-enter those contracts. They'd rather control it themselves and the entire chain. So Albemarle's doing that now. We're seeing other guys doing it, and I think that's going to help stabilize pricing in the industry, because tier 2 and tier 3 Chinese players are not the guys to rely on.
Yeah, but I'll say lithium market is far from behaving like a cartel. So that's far from reality. So even though there might be meetings, people talk, in particular in China, the effect in the market typically is not big, because unless they have governmental support, which typically for this type of price manipulation they don't, nothing will change. So, and it's, as Rodney said, it could be that they talk, but then at the first symptom that the price is improving, they literally try and sell as much as they can at a higher price to capture the upsides. So it's far from an OPEC or oil market kind of behavior.
Okay. Any further queries for the panel up here? Okay, well, look, thanks to my panelists as well.